This morning we got some big news from CoreWeave, the data center operator that we've championed. It makes its money by renting out computing power, especially for artificial intelligence. The stock came public with a whimper in March before going on to become one of the best performers of the year. Today it got hit after CoreWeave announced that it's buying Core Scientific, another data center infrastructure play, for $9 billion all-stock deal. These two companies are already long-standing partners. CoreWeave has been paying to lease Core Scientific's infrastructure for years. So now they own it outright. Very positive. And hey, given that this stock's up almost 300% from where it came public, they should be using it to pay for acquisition. That's smart. Of course, the market didn't love the transaction. CoreWeave fell more than 3% today. Core Scientific plunged almost 18%, in part because we've been hearing rumors of this deal for a week and a half. So Core Scientific shares had already run, and the ultimate deal price tag was a little lower than expected. When it comes to this company, I'm a believer, and you know that. But why not go straight to the source with Michael Intrator? He's the co-founder, chairman, CEO of CoreWeave, to get a better sense of what's happening. Mr. Intrator, welcome back to Mad Money.
Thank you for having me. Great to be here.
All right, so Michael, once again, we have to explain to people that this was actually quite a good deal for you, in part because of your long-standing relationship. Maybe you can tell us about the Core Scientific deal. I know you wanted them even last year for a much lower price. It was worth it even at these prices.
Yeah, so one of the things important to understand is that, like, the two companies have been working together for an extremely long time. Our first contract with Core Scientific dates back to 2018, where we used them for hosting resources on GPU compute for cryptocurrency mining. And so we really know the team over there. They really know us. There's a lot of synergy between them, the two entities. Right. And there's a lot of positive goodness to be extracted from just the interaction of these two entities. Over the years, we've kind of built and expanded our relationship as our company has evolved. They have evolved with us. They have built up infrastructure that is capable of supporting the type of compute that drives our business forward, the accelerated compute, the HPC. And we continue to work with them really closely, and it became an opportunity to kind of bring them under the same tent to work with us and to build a larger company that's capable of building and extending the offerings that CoreWeave brings to the most demanding AI clients in the world. And we took advantage of that. We moved forward in a really great deal with them that I think will be very accretive to both parties. And
you mentioned special things that they have. 1.3 gigawatts of existing gross power capacity. It's really pretty terrific. That you can use that immediately.
Yeah, so we've got a pretty big footprint with them already. I think we're about 850 megawatts worth of infrastructure already contracted with them. They've got additional capacity within their fleet that is, some of it is going to be able to be repurposed to extend our continual build of infrastructure. Some of it probably will be more crypto focused over time. And
so you're going to keep some of the crypto?
We intend to disgorge the company of the crypto-only assets that we don't really feel like can be efficiently or economically converted into HPC.
But management of Core Scientific, when I spoke with them, felt that almost everything could be repurposed for you.
Yeah, so with enough time and money, I think everything could be. Okay. For us, it's just a question of which assets are located in jurisdictions and have access to infrastructure that make it most productive for us.
Now, it was worth it, obviously. The deal last year would have been something if you could have been able to get it for $5.75 in cash, though. The way this deal's worked, the way I look at it, this actually builds your equity up. People have to understand the way you do your accounting and how this makes you even better in terms of less leverage.
Yeah, so it actually does take down our leverage rate.
Yeah.
One of the things that,
because the bears were saying leverage. You and I were saying $40, give it away.
Yeah. So you're absolutely right. Like it does incrementally bring down our leverage, which is great. And it really does allow for an opportunity for us to expand our footprint and to ensure that we're in a position to provide best in class infrastructure to our clients.
Right. Now, one thing people have to recognize is that you kind of, I don't say you leaked it, but you kind of made it pretty clear business is dynamite right now.
Yeah, listen, we're busy. We've got a tremendous amount of demand for the product that we bring to market. There's a little bit of a misunderstanding still within the market in terms of how important the software stack that we have built and augmented.
People just think you're just like you're just a REIT.
Yeah, that's look. You and I talked about this right at the beginning. The market's going to take some time to understand the extent of our business and the differentiation that's associated with how we go about running the software that drives the infrastructure. Earlier this year, we acquired Weights and Biases, and that's a really great example of reaching up the stack into the software layers, as opposed to Core Scientific, which is really more down the stack into the physical infrastructure. And by putting that all under the same roof, we feel like we're really able to drive tremendous shareholder value.
Now, let's say for something that people maybe understand in terms of strength, not everybody got the NVIDIA GB300 NVL72 platform so fast, did they?
Yeah, so it's not even a question of whether or not they got the platform this fast. It's a question of, is their infrastructure, is their software stack built to be able to bring that online? And other people got it actually before we did, but our ability to kind of take the infrastructure and operationalize it and deliver it into a performant configuration for commercial use is just unmatched in the market.
Right. So you're still speaking to Jensen Huang, he's a big shareholder. Yeah. He is expressing that the demand is still incredible.
Yeah, you're feeling that demand from Jensen. You're feeling it from my peers across the infrastructure and cloud space. There were some very large deals. Ours was a $12 billion deal. There was another extremely large deal that was announced after that in the last few weeks. You're continuing to see broad-based demand for the product, for the infrastructure, for the compute to be able to drive artificial intelligence.
My sources indicate that there are many private equity firms that feel like, you know what, we got to bit off a little more than we can chew. Maybe we ought to sell them. Would those deals be accretive to you? Depends on the terms. But private equities, not everybody in private equity knew what the hell they were doing when they went into this business. You told me that would happen, and here it is. It's starting to develop, isn't it?
Yeah. So look, I think there are opportunities to position yourselves to take advantage of this wave. Right. And a lot of different folks took different positions in terms of how they wanted to address, the super cycle that's really being, that AI is driving. And our approach was to really start as close to the base layer as we could. The Core Scientific is another example of how we get down really to the bricks and mortar and kind of work our way back up through the physical compute, through the infrastructure stack, all the way up to the top level where you see Weights and Biases or other software extensions.
Now, you obviously have been watching the development of Oracle. Stocks doubled because they're getting in this business. Are they offering the same kind of thing to a hyperscaler as you do?
Oracle has its own set of products that they're offering, and they are a formidable competitor. They are one of the companies out there that I think that we compete with, in terms of being able to offer infrastructure to the AI labs that are offering infrastructure to the hyperscalers, but. From our position, we really believe that over time, what's going to differentiate us from anyone else is the software stack that drives the performance that we're able to achieve on our infrastructure.
See, I'm glad you brought that up because in the time we got to know each other, what I'm trying to explain to people is, look, Oracle's a great company, and we know, and Safra Catz is great, Larry Ellison's great. But when it comes to core competence, the people I know in this business want to work with you because you guys are what you said. You're kind of like you parachute in when things are broken, which things do break. You are part of the stack. And in many ways, you are not just a dumb facility. You are a smart facility, which is why people want to partner with you.
Yeah, look, when we built our software stack, we kind of built it from scratch, right? Like we started with a blank sheet of paper and said, make every decision based on optimization of this infrastructure solution. We're not trying to incorporate any legacy technology. We're not trying to incorporate any history of success or failure. We're really just saying, based on all the options in front of us, what is the best solution? And when you face a problem that way, you really can build into your software, into your hardware, into the way that you deliver the compute, incredible performance enhancing step functions that just make it really easy to do the work that these companies have to do on our infrastructure.
And at your suggestion, I saw it myself with my team. I wanted to know for sure that this wasn't just like some empty place where there's just lots of different silos. It's very clear that it's filled with software that works very well with what Jensen brings to the party.
Yeah, no, it really is hand in glove. You got to be able to bring the hardware, you got to be able to bring the data center, and you got to be able to bring the software stack to deliver it. And
well, once again, congratulations. The stock, I understand how the stock had to be down because of a stock deal. I also know that the shorts are trying to jump all over it again. And my advice to them is good luck. That's Michael Intrator, co-founder and CEO of CoreWeave, a deal that we were really behind by the day, the moment it came public, and ever since then. Mad Money's back after the break.
Coming up, could the labor market be the key to a continued rally for stocks? Cramer's going off the charts to find out. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.